Imagine discovering that the biggest financial secrets in history were never locked in vaults. They were hidden in plain sight. From lost empires to forgotten fortunes, the story of wealth is filled with mysteries that shaped the world without most of us ever knowing. What if the same secrets that built ancient kingdoms could still change your life today? Before we dive into the lost wealth systems of pharaohs, merchants, samurai, and kings, here's the truth. Money has always been more than coins and paper. It's trust, power, and strategy. And the people who understood that ruled their age. The ones who didn't? Their fortunes vanished, buried under dust and time. If you're ready to uncover the unseen history of money, the hidden tricks, forgotten systems, and secret financial tools that shaped civilization, then stay with me. Because the deeper we go, the clearer you'll see how these ancient lessons still apply right now. Don't forget to like, share, and follow so you never miss another journey into the mysteries of finance history. Let's begin. For as long as humans have exchanged goods, there have been secrets surrounding how wealth is built, preserved, lost, and sometimes hidden from view. History often celebrates kings, merchants, and magnates, but behind their wealth lie stories rarely told, moments where fortunes hinged on a whisper, a loophole, a tradition, or even a mistake that changed the path of entire civilizations. To explore lost wealth secrets is to understand that finance, far from being a sterile system of numbers, has always been a living, breathing story of people trying to make sense of value, trust, and survival. The ancient world already possessed its own hidden financial mechanisms. In Mesopotamia, long before coins existed, clay tablets acted as promissory notes. Most people imagine barter was the dominant system, but evidence shows that complex credit systems powered trade thousands of years earlier than often assumed. Farmers would borrow, seed grain at planting season and settle the debt after harvest, creating what historians now view as the first interest-bearing loans. These tablets were sometimes broken after repayment, but in other cases they were intentionally preserved. Some families used them like precious documents, a way to track obligations owed to them. Modern archaeologists uncovering these tablets sometimes discover cancelled debts that once symbolized power, the earliest form of stored, invisible wealth. In Egypt, wealth was often trapped in religious temples. The priests understood the power of being trusted custodians of grain, gold, and records. In many ways, temples functioned like banks long before the idea existed. Ordinary people could deposit grain for safekeeping. In return, the temple issued a receipt, which could later be traded. What many don't realize is that these receipts sometimes circulated as money themselves, much like checks or banknotes today. Egypt's economic puzzle reveals a secret lost to time, the idea that money is not always a precious metal but a promise built on trust. As long as people trusted the temple, the receipts had value. And because temples were politically stable, their paper money lasted centuries, further proof that humanity's financial creativity is ancient. The Greeks added another layer to these hidden histories. While the world often remembers them for philosophy and democracy, their maritime trade innovations were just as transformative. Wealthy shipowners rarely risked their own gold when funding voyages. Instead, they used what we would now call a bottomry loan. Money was borrowed for a voyage and only had to be repaid if the ship returned safely. If the ship sank, the debt vanished. This clever early form of insurance encouraged trade across the dangerous Mediterranean. But it also created room for manipulation. A few cunning traders arranged false reports of shipwrecks to escape debts, while others declared bankruptcy to avoid repayment. Athens developed strict documentation rules because of these abuses, showing that wherever money moves, secrecy follows. Rome inherited Greece's financial knowledge but took it to monumental proportions. Roman bankers, known as argentarii, managed deposits, loans, and payments much like modern institutions. Yet one of Rome's strangest financial secrets involved ghost wealth, the fortunes of the dead. Roman laws taxed inheritances, and wealthy families developed elaborate methods to shield assets, such as adopting adults to pass wealth without taxation or storing treasure in rural villas beyond the reach of urban authorities. Some Roman estates contained sealed rooms intentionally built to hide gold and valuables from tax collectors. Centuries later, archaeologists came upon mysterious caches with no documentation, never knowing whether they belonged to careful families or desperate hoarders in collapsing times. Rome reminds us that tax avoidance is older than most governments themselves. As the medieval world emerged after Rome's fall, Europe found itself cash poor. But scarcity often breeds innovation. Jewish, Arab, and Italian merchants living in Mediterranean trade hubs developed systems to move money across distant lands without physically carrying gold. The secret lay in the bill of exchange. A merchant in Venice could write a document promising payment to a partner in Cairo. That partner would receive the funds through an intermediary. To outsiders, especially local rulers, it appeared as if wealth appeared magically across borders. These bills were written in coded language to protect the merchants from theft or coercion. Because rulers couldn't decipher the documents, merchants gained an invisible advantage: financial mobility even in times of war or instability. One of history's most astonishing lost financial tricks came from medieval Japan. Samurai, expected to live by honor and martial skill, were not supposed to concern themselves with commerce. But reality differed. Many samurai secretly engaged in moneylending to farmers. Because the practice carried social stigma, they often worked through intermediaries. Some clans amassed large stores of wealth this way, but because the lending was unofficial, they kept no clear records. When modern historians examine archives from the Edo period, they sometimes encounter references to hidden loans or buried chests, but few details. The secrecy ran so deep that even descendants often had no idea their ancestors participated in finance at all. This is one reason historians believe countless samurai fortunes were lost simply because no one knew where to find them. While Asia, the Middle East, and Europe were shaping financial traditions, other parts of the world built equally fascinating systems. In West Africa, the Kingdom of Mali controlled vast gold fields. But the real wealth secret wasn't the gold, it was how the empire managed information about it. To maintain stable markets, Malian rulers kept the location and quantity of gold mines a closely guarded secret. Mansa Musa, arguably the richest person in world history, destabilized gold prices in the Mediterranean simply by distributing too much during his pilgrimage to Mecca. This teaches a timeless lesson: circulation of wealth can be as powerful, sometimes more, than accumulation. The Malian system of secrecy shows how information itself becomes a financial asset. Fast forward to the European Renaissance, when the Medici family in Florence revolutionized banking. Their success did not arise simply from accounting genius. A major hidden factor lay in political influence. The Medici used a network of loyal allies in church and government to secure privileges no competitor could match. They also invented double-entry bookkeeping, a method that revealed the health of their business to insiders while obscuring details from outsiders. This innovation, now foundational to modern finance, was once a guarded secret shared only with trusted family partners. The Medici understood that transparency could be dangerous. Revealing too much risked giving rivals the blueprint to their power. As global exploration intensified, wealth secrets traveled with sailors. Many people know about pirate treasure, but the financial side of piracy is studied less often. Pirates rarely buried treasure, they spent it quickly. The real economic mystery lies with privateers, government-licensed pirates who operated in a gray zone between legality and theft. Some privateer captains wrote coded logs listing the distribution of loot. These logs helped ensure fair division among the crew but also protected them from prosecution if authorities changed their political alliances. These documents were often destroyed after a voyage, which means huge sums of wealth entered circulation without any official record. Some historians believe that early Caribbean economies were boosted more by unrecorded pirate earnings than by official colonial trade. The Industrial Revolution brought new forms of wealth and new ways to hide it. Railroad barons in the United States perfected the use of shell companies, entities created to conceal ownership. They would purchase land through intermediaries, driving up prices and later selling those parcels to their own railroad companies at inflated values. The profits appeared legitimate on paper but were engineered through layered secrecy. These tactics laid the foundation for modern corporate loopholes and offshore accounts. Although laws changed over time, many strategies pioneered in the 19th century still survive, merely updated for a digital world. Every age finds its own financial shadows. In the early 20th century, wealthy Americans and Europeans hid money in Swiss banks because Switzerland enforced strict confidentiality rules. For decades, it became the global symbol of hidden wealth. Yet many people don't realize that the system originated not for secrecy but for safety. European aristocrats, afraid of political upheaval and war, wanted neutral ground to store fortunes. Over time, confidentiality became a selling point, and Swiss bankers built an industry around it. Only in recent decades have these laws softened. But the legacy remains. Many modern offshore practices are descendants of early Swiss banking norms. On the other side of the world, secret financial strategies developed in ways shaped by culture rather than law. In parts of South Asia, rotating savings groups known as chit funds samiti, or hundi systems, allowed communities to pool money. These systems operated on trust, often with no written records. Though informal, they became lifelines for families and traders. A merchant could receive a lump sum at a crucial moment, using it to expand business without going to a bank. Because these networks left few paper trails, outsiders often underestimated their economic impact. Even today, economists acknowledge that community-based financial systems have powered countless small economies, though their contributions remain largely invisible in official records. Meanwhile, technology brought new hidden corridors of wealth. In the late 20th century, digital banking made cross-border transfers easier than ever. This era produced another wave of financial secrecy, most famously revealed through leaked documents such as the Panama Papers. These exposés showed how wealthy individuals used offshore companies to move money beyond the reach of domestic tax systems. Yet what is rarely discussed is how ordinary people throughout history have done similar things on smaller scales, hiding coins in walls, storing jewelry in household shrines, or keeping wealth in livestock instead of cash to avoid taxation. Technology may change the tools, but the motivations remain constant. The emergence of cryptocurrency brought some of the most dramatic modern financial secrets. Early adopters used Bitcoin simply because it operated outside traditional banking. What they didn't realize was how volatile and transformative this new asset class would become. Many people lost access to their digital wealth because they forgot passwords or discarded hard drives. Others became unexpectedly rich because they bought coins when they were cheap. In a strange way, cryptocurrency revived ancient ideas: money as a ledger of trust, wealth stored in invisible form, fortunes lost because no one knew where to find them. Looking across these stories, a few patterns become clear. First, wealth is never merely a matter of possession, it is deeply tied to knowledge. The richest individuals and societies often succeed because they understand hidden aspects of finance, whether it's credit systems, information advantages, loopholes, or community trust networks. Second, secrecy has always played a role. From clay tablets buried in ancient Mesopotamia to encrypted digital wallets today, people have continuously sought ways to store value discreetly. And third, wealth is far more fragile than it appears. Fortunes vanish when records are lost, trust collapses, governments shift, or technologies change. Yet there is also a hopeful message hidden within this long journey. Human beings have always found ways to rebuild, rediscover, and reinvent the meaning of value. Even when wealth disappears, knowledge reemerges. History is full of forgotten innovations that later return in new forms, proving that financial creativity is one of humanity's most enduring qualities. The story of lost wealth is not a tale of despair. It is a reminder that economic systems evolve because people adapt. In the end, studying hidden finance history teaches us something personal. Understanding money is not just about understanding markets, but understanding ourselves. Every society grapples with how to preserve what it values, protect what it earns, and pass on what it builds. And every era leaves clues about how wealth can be created or lost. When we trace those clues across civilizations, we uncover the timeless truth that the greatest financial secret is not buried treasure, not offshore accounts, not even the clever inventions of merchants or bankers. The real secret is that wealth has always depended on human choices, trust, cooperation, innovation, and sometimes secrecy. And as long as humans continue to shape their world, new financial secrets will emerge, waiting for future generations to uncover them. And just like that, we've traced the hidden pathways of wealth from ancient temples to modern digital vaults. These stories remind us of something powerful. Every age has its own secrets, and the people who rise are the ones who learn to see what others overlook. Wealth isn't just numbers, it's knowledge, timing, trust, and understanding the forces that move history. If today's journey opened your eyes to the unseen side of money, imagine what else is still buried in the past, waiting to be uncovered. The next secret could change how you see your own financial future. So if you enjoyed this deep dive into the forgotten chapters of finance, make sure to like, share, and subscribe. Drop a comment with what hidden wealth mystery you want to explore next. Your curiosity keeps this journey alive. Until then, stay curious, stay aware, and remember, history isn't just behind us, it's a map that still guides the wealth of tomorrow.